I want to circle back on the CFPB because I've reported a lot on the CFPB and what's going on there. And there was a attempt to block President Trump from actually being able to continue with the dismantling of the CFPB. And I think this was brought up in the DC District Court of Appeals. And it was brought on by some employee unions and different employee groups. And basically what they ruled is that these unions, these employee groups really don't have the right to challenge what it is the president's doing with the CFPB. So they have thrown out those lawsuits attempting to stall President Trump's dismantling of the CFPB. So it is expected at this point, unless something changes, that they will continue with their RIFs, their reduction in force, and probably get the CFPB just down to a skeleton crew. Now, what we don't know is that the long-term plan, or is there a plan to reimagine what the CFPB might look like? But in the short term, any blocks that had been happening, trying to keep it from going down the path that it was going, have been removed, and it appears that the plan is still to continue to shrink the size of the CFPB. Now, as I've reported in the past, what this means is I would not then assume that there will be, no regulation in the mortgage industry. What you should expect is the state regulators to fill that gap in a more robust fashion. So imagine 50 CFPBs all around the country in different states, right? So this is not free reign in your compliance departments. This means that you'll have to deal more specifically with the states, which, in some cases might be worse. It depends on the state. And if you're a national company, well, you have to deal with every state. So we'll see how that plays out. But anyway, I wanted to report on that since I've talked so much about the CFPB and what's going on the Market Shares podcast.